So in the last class we started IRR, internal rate of return. So what is internal rate of return? In the last class I introduced the concept, we didn't practice the questions. So होता क्या है? वो IRR होता है, right, exactly right. NPV, what is the difference between NPV and IRR? One key difference. One is NPV is in absolute terms. This is in relative terms. ठीक है. Second is in NPV, under NPV, the discounting rate is already known. We know the cost of capital, the discount rate at which we calculate the present value. So the discount rate is known. Under IRR, the discount rate is not known, rather this is the rate that we calculate by hit and trial. The technique for this, which is known as, is interpolation. Okay, fine. So there are two methods to calculate now. What is the acceptance and rejection rule? IRR refers to the rate which equates the present value of all cash inflows with the present value of all cash outflows. So the present value of cash inflows is equals to the present value of cash outflows. And since NPV is present value of cash outflow minus the present value of cash inflow, since these both are equal, that means this will be 0 at IRR. So the NPV will be 0 at the internal rate of return. What will be the acceptance and the rejection rule? If the IRR is more than cost of capital. If the IRR is more than the cost of capital, then we will accept the project. If it is less than that, then we will reject the project. Fine. Now we have to understand that how we calculate it, right? So if the present value annuity table is given, then what we will do, we will calculate the fake payback period. Okay. How do we calculate? What is the formula for payback period? What is the formula? Initial cash outflow upon annual cash inflows. So by calculating a rough average annual cash inflow, we will calculate a fake payback period, and then on the present value annuity factor table, we will see at which percentage that value is coming, near to which percentage that value is coming, and accordingly we will calculate. If the present value annuity factor table is not given to us, then it is a pure hit and trial. You will try it at 10% and then you will accordingly value that you need to lower the rate or you need to increase the rate. Acha, if we increase the rate, the present value increase or decrease? Suppose at 10%, the present value was 10,000 and I want the present value to be 12,000. Then what should I do? I should increase the rate or I should decrease the rate? To increase the present value, we need to decrease the rate. So what I'll do, I'll try it at 9%, right. So for calculating IRR, we need two rates. One where the NPV is positive, and at one rate the NPV is negative. Fine. So we'll do one question and then it will become clear. This one we did in the last class. Let us try this one out. So the cash outflow is 3,84,000. These are the cash inflows. Now what will I do? I'll calculate, I'll take a rough interest rate, that is 10%. So I am taking 10%, at 10% I will calculate the NPV. Okay. So the cash inflows of 1 year, 2, 3, 4 and 5. This is 1,50,000, this is 1,25,000, this is 1,75,000 and 50,000. What will be the present value factor? How to calculate a present value factor? Present value factor is this. This is the present value factor formula. We are taking 10%. So what we'll do? 1 divided by 1.1 will be for 1 year, which will be 0.909. Dobara se will press equal. This will be the for the second year. So the present value factor for the second year will be 0.8264. Now for the third year it will be 0.7513. For the fourth year 0.6830 or 310. And then it will be 6209. Right? You can write it as this. To calculate NPV, what we have to do? We will calculate the present value of the future cash inflows. For that we need to multiply it with the present value factor. So we will multiply 1,50,000 with 0.9091. This will be 1,36,365. Then 1,25,000 with 0.8269. This will be I am taking this as this. Okay. 1 lakh into 0.7513. This will be 75130. 75,000 into 0.6830. 51225. 0.6209 into 50,000. This will be 31045. Now I need to know the sum total of this, which will be the present value of cash inflows total. So I'll add all of them. this will be 3,97,128. How much do I need? I need to equate the present future cash inflows with the present value of the cash outflow. So I need the value of 3,84,000. This is on the higher side. So we have NPV will be, we have the positive NPV. NPV will be cash outflow minus inflow. So this will be the negative NPV. So what will be the NPV? 3,84,000 minus 3,97,128. So this will be 13,128. Now I need a lower value. Here I want a positive NPV. For positive NPV I need to lower this. अब इसको lower लाने के लिए what I have to do? Increase the rate or decrease the rate? Increase the rate, right? So what we'll do? We'll calculate it now at 11%. Present value factor at 11%. How we calculate the present value factor? 1 divided by 1.11, which is for 1 year it will be this, for 2 years, 3 years, 4 years and so on. Negative क्या था पहले? Negative shows that this is an outflow. This is a cash outflow. This shows that these are the inflows. This is the cash outflow in the year 0. नहीं, negative इसलिए शो कर रहा है ये बताने के लिए कि ये outflow है और ये inflows हैं. हाँ, क्योंकि हम क्या करते हैं present value of cash outflow minus present value of cash inflow. So this is just the outflow. So what will be the factors here? 0.9090. Second will be 0.8116 for third year. 7311 6587 5934. So we'll multiply this value with the present value factors of 11% to get the NPV at 11%. So 135135. Now the value is reducing. 97392. 101450. We'll add all of them. 29670 plus 49,403 plus 73,110 plus 1,01,450 plus 1,35,135. This will be 388,768. Now even this is higher. We will take the closest ones, the one that is just above and the one that is just below. So we have to reduce it further. We need to bring it down further. So we will increase the rate again. So now we will calculate it at 12%. Calculate the present value factor at 12%, everyone. Present value factor at 12%. Everyone has to calculate. Everyone calculate. Where is the calculator? क्या? हाँ. ये 1 लाख नहीं है ना, ये 1,50,000 है. हाँ. This is 1,50,000, 125, 175, 50. 25 का डिफरेंस है सब में. Now calculate. What is the first NPV factor for first year? 8928. Everyone is clear that how we calculate the present value factor, right? Any doubt, anyone? 0.7972, 0.71178. 0.06356 and then 0.5674. So now we will multiply this with, to calculate the present value, we will multiply the present value factor with the respective cash inflows. So we will multiply 1,50,000 with 0.8928, which will be 1,33,920. Then we will multiply 1,25,000 with 0.7972. This will be 99,650. Then we will multiply 0.7118 with 1 lakh, which will be 71180. Then we will multiply 0.6356 with 75,000, 47,670. 0.5674 into 50,000. This will be 28,370. So what will be the total now? The present value of all the cash inflows, 28,370 plus 47,380,778. Now we have one NPV on the lower side of this and one NPV on the higher side, right? So what we'll do? Can I rub this off? Yes. So at this was 11%, we had 3,88,768. At 12%, we had 3,80,778, right? And what is needed? 384,000, right? Now we have to calculate the IRR rate. So now we know that the rate is between 11 and 12%. So it is above 11 and below 12%. So 11% plus, what will plus? NPV at the lower rate. What is the NPV here? NPV क्या होता है? We'll need positive NPV. So how much is the positive NPV? 3,000. This is 728. 380,778. So how much is this? 3,84,000 minus 3,80,778. This will be 3,222 and this will be 4,768, right? This is negative and this is positive, right? So we'll put positive NPV above. From the positive NPV, we'll subtract the negative NPV, which is 4,768 into the difference between both the rates. So this will be 11% plus, which is 4,768. 3,222. Okay, let me check. 3,200 divided by 7,968, which will be 0.40. So this will be 11.41. You can take the round off. Percent is your IRR. Is it clear till here? Anyone, any doubt? Next question you will be solving. So what is the formula of IRR? If we convert this into the formula, lower rate, let me erase this. I can rub this off, right? IRR is equals to lower rate plus positive NPV divided by, from positive NPV subtract the negative NPV into the difference between the higher rate and the lower rate. Right? If we have to rank the projects based on IRR, how we will rank it? The one with the highest IRR will be given rank number 1. Is it clear till here? Shall I move to the next question? ये क्वेश्चन हर मेथड में इसलिए कराते हैं ताकि आपको डिफरेंस समझ आ पाए. The same question we take for every method so that you realize how if they are contradicting one another or not. For machine, calculate IRR for machine X. हाँ, तो but you have to calculate what is the initial investment in this. हाँ. So in this question first we have to calculate the initial cash outflows. How we calculate the initial cash outflows? We have done so many questions on initial cash outflow. What is the formula for initial cash outflow? Purchase cost plus installation charges if there are any, plus working capital, plus minus the tax liability or tax saving on the old asset, minus the salvage value of the old asset, right? In this question we don't have any old asset, so this part will become redundant. What is the purchase cost of the new machine? 6 lakh. Are there any installation charges? There are no installation charges. Is there any working capital requirement? Yes, 3 lakh working capital requirement. Fine, SLM is the depreciation method. So this is 9 lakh. So what we have to calculate? We have to calculate such a present value of the future cash inflows that equates to 9 lakh rupees. Now in the calculation of the subsequent cash inflows, what we will take? Both the cash inflows of the annual year and then the terminal value, the cash inflow at the end of the useful life. So first we need to calculate what? Second step is we have calculated the initial cash outflow. Second is subsequent cash inflows, and since for machine X the revenue is same, so we will calculate it for 1 year and that will remain same for the other years. So this will be subsequent annual cash inflows. How we calculate this? We have the earning before tax and depreciation of how much? 3 lakh rupees. Now what we'll do? We'll subtract depreciation. How much is the depreciation? 6 lakh minus the estimate, we'll take the estimated salvage value or the cash salvage value? Estimated salvage value, because this is the book value that we estimated at the outset of the machine. So, we will subtract 1 lakh from 6 lakh, which will be 5 lakh divided by the number of years for SLM. So, the depreciation will come out to be 1 lakh rupees. So, the profit before tax is 2 lakh. We will subtract tax at the rate of 30%, which will be 60,000. Profit after tax will be how much? 1,40,000. So, we need to add back what? Depreciation, which was 1 lakh. So, the cash flow after tax will be 2,40,000 for each year. So, for all the 5 years, this is an annual cash inflow. But in the 5th year, we will also have the terminal cash inflow, because after 5 years, the useful life of the machine ends. So, we will have a terminal cash inflow, right. So, the third part will be terminal cash inflows. What is the formula of terminal cash inflows? Scrap value of the new machine plus minus tax saving slash tax liability and working capital. So, what is the cash salvage value? Now, we will take the cash salvage value. This will be 1,20,000. There is a capital gain of 20,000. So, the tax rate will be 30%. 30% of 20,000 will be 6,000. We will subtract tax liability of 6,000. What was the working capital? 3 lakh rupees. So, this will be 4,14,000 will be the terminal cash inflow. Fine. Is it clear till here? This till here we have done in every question, right. Now, what we have to do? We have to calculate the IRR. So, we will take any random percent. So, I am taking 15%. Here we write the cash flows, present value factor at 15%. So, the cash inflow for first year was 2,40,000, for second year also 2,40,000, third year also 2,40,000, fourth 2,40,000, and in fifth year we will have 2,40,000 plus the terminal cash flow for that year, for the end of the life. What was the terminal cash inflow? 4,14,000 plus 2,40,000 This will be 6,54,000, right? So how will calculate the present value factor at 15%? 1 divided by 1.15 for 1. Huh? Randomly I have taken. It may I have to take something. If you have the present annuity table with you, what you will do? अगर आपको present value annuity factor table is given in the question, that will make your work easy. How? You will calculate now. You will add all these cash inflows, 6,54,000 plus 2,40,000. I have sent the present value annuity factor table on your Teams group. Please check. Now this total will be 16,14,000. So the average cash inflow, if I take, I will divide it by how much? 5 years. So the average cash inflow will come out to be 3,22,800. Now what will I do? If the present value annuity factor table is given to me, I will calculate the fake PBP, payback period. So for what is the formula of payback period? Cash outflow divided by the present value of the, not the present value, just the annual cash inflow, right? The cash outflow was 9 lakh and the average cash inflow is 3,28,800. This will give me what? How much? 9 lakh divided by 3,22,800 will give me 2.788. Now I have shared a present value factor table on your Teams. What we'll do? We'll check here. What is the useful life of the project? 5 years. For 5 years, we'll check where is this value. That was 2.78. So 2.78 will come in between of these two. 7.8 will come at how much percentage is coming? 23 and 24. 23% and 24%. So the IRR will be somewhere here. From 22 to 25 you can take. So what we'll do in that case, we'll calculate the IRR and NPV at 23%. That will make our job easy because now we can find out approximately where IRR will lie. But if the present value annuity factor is not given, then you have to take randomly any percentage. And from there you will calculate. If the difference is too high, then you will increase 5% or decrease 5%. If the difference is little, then you will do it by 1 or 2%. Fine. So since we know it is around this, so now we are taking at it at 23%. Let us calculate the present value factor at 23%. So what will be for first year? Now what we'll do? यहाँ पे क्या change हो जाएगा? This will be 1.23. So 1 divided by 1.23 for 1 year. This will be 0.813. Then we'll do second year के लिए. If you want to do it in the calculator, we'll simply press equal to again. That will give us for the second year. This will be 0.6609. For the third year, 0.5374. For the fourth year 0.4369, and for the last year 0.3552. So what will be the present value at 23%? We have to multiply this with this. So multiply. One lakh 95,120. 1,58,616. 0.5374. 1,28,976. 0.4369. This will be 1,04,856. 0.3552 into 6,54,000. So this will be 2,32,300. We will add all of them to find the total present value. How much? 819,892. 892. And how much did we need? 9 lakh. Still there is a lot of difference between 9 lakh and 8,19,000. So we will calculate it now at 25%. This is how you do IRR. It is in hit and trial method. So what will be the present value factors at 25? 0.8. Everyone please solve. What will be the present value factor at 25%? We need to increase the value or decrease the value. For 9 lakh, we need to increase the value or decrease the value. We need to bring it close to 9 lakh. So what we'll do? Increase it or decrease it? The percentage value. We will decrease it. To increase the PV value, we have to decrease the interest rate. So if it was 23%, let us take it as 20%. So what will be the present value factor at 20%? 1 divided by 1.2, 0.8333, 0.6944, 0.5787, 0.4823, and then it will be 0.4019. Now multiply this present value factor with the respective cash inflows. How much will be the value? For first year it will be 19,992. For second year 166,667. For the third year, 0.5787 into 2,40,000, which will be 1,38,888. For the fourth year, 115,752, 262, 843, 8841. There is no dot.
It was 30.6, so it would be 3.6.
This will be 2,62,842.6. So you can write it as 2,62,843. What will be the sum of all the present values? 884131. So still this is less than 9 lakh. So to increase the cash flow present value, what we'll do? We'll decrease the interest rate. So now we have to calculate it at 19%. हाँ, अगर क्वेश्चन आया तो obviously. In real life scenarios also IRR is very important. If you ever invest, you will see that in your dashboard it will always show XIRR, that is expected internal rate of return. हाँ, ये होता है वो. After this we'll do, after IRR, MIRR, PI, and then we'll take the risk analysis of capital budgeting, and then we'll start from next class cost of capital. With that we'll finish capital budgeting decisions. PI is simple, MIRR is also simple. Just the IRR calculations are tedious because you have to hit and try again and again. What is the value at 19%? What is the present value at 19%?
0.8403.
The total present value.
Total will be 9,07,290.
9,07,290. At 20% the present value was 884131. Right. So now we have one value higher than 9 lakh and one value lower than 9 lakh. So NPV at 19% will be 9 lakh minus 9,07,290. So this will be negative 7,290, and NPV at 20% will be 9 lakh minus 8,84,131, which will be 15,869, right? So the IRR will be, what is the formula for IRR? Lower rate, that is 19%, plus positive NPV, which is 15,869 divided by divided by positive NPV minus the negative NPV into the difference between the two rates, which is 1%. So this will be 15,869 divided by 23,159, which will come out to be 0.6852. So this will be 19.6852%. Is it clear? Can you calculate for machine by? Chalo, I'll give you an approx that where it will lie. Somewhere you just calculated 17 and 18%. Calculate at present values at 17 and 18%. हाँ, I want everyone to calculate. The two things that will remain same is the initial cash outflow, which was 9 lakh, and the terminal cash inflow, which was 4 lakh 14,000. What will change? The subsequent cash inflows. I'll tell you the answer for Y and Z, calculate it at home, and if there is any doubt, then we can discuss it in the next class. For Y, the IRR is 17.564%, and for Z, it is 21.630. For X, how much did we calculate? It was 19.69. So, which of the three machines will we prefer? Ranking. What will be the ranking? This will be given first preference, second and third. Try and calculate the values at home. If there is any doubt, we can discuss it in the next class. Now, one drawback that comes with IRR is when there is a mutually exclusive projects. What are mutually exclusive projects? What are mutually exclusive projects? This I have told you.
If we have selected one project, then we can't select the another project.
Yes, that if we select A, then we cannot select B. If we select B, then we cannot select D. So suppose there are 3 projects, project A, B and C, and you have 50,000 rupees. Project A and B cost you 40,000 and project C cost you 10,000. So this is an independent project because you can take irrespective of whether you choose A or B. But from amongst A and B you can only choose one. So these two are mutually exclusive projects, because if I choose project A then I have to reject B, and if I choose B then I have to reject A. These are known as mutually exclusive projects. Now if there is a conflict between NPV and IRR under mutually exclusive projects, which method will you follow? Suppose IRR says that as per IRR this is 15%, this is 12%, and as per NPV this gives you the profit of 9 lakh and this gives you 11 lakh. So as per NPV you should now so as per NPV you should select this project because the NPV of this is higher, and as per IRR you should select this project. So in such a scenario what you will do? Which project should be given preference? Generally if there is a conflict between NPV and IRR, NPV is given preference because it aligns with the goal of the financial management, which is to increase the wealth of the shareholders. But suppose there are two projects with different lives. If the project has both has same life, this is also for 10 years and this is also for 10 years, then you select this project, the one with the higher NPV. But if the lifespan of this is suppose 20 years and this is 10 years, are they comparable? No, because I may be getting higher NPV, but this is over a larger span of period than this. Here I will recoup my amount in a shorter time frame. So what we have to do in such scenario, when there is unequal life of a project, if there is an equal life, we will go by NPV. The one with the higher NPV will select that project. But if there are unequal lives, then we have to calculate something known as annualized NPV. What is annualized NPV? What will be the annualized NPV? NPV divided by the cumulative present value. So we will bring it in the form of annual NPV, that is comparable in 1 year, and the one that gives higher annualized NPV will choose that project. Okay. So let us do one question on this. That was not the IRR chart, that was present value annuity factor table. क्या होता है annuity? उससे हम क्या करते हैं, why we use present value annuity factor table. We calculated approximately our cash inflows, approximately we calculated for different years, we calculated the cash inflows. Then we calculate that approximately average per year how much cash inflows we are getting. Fine. So annuity क्या होता है? Annuity is equal amounts at the equal interval of time. That is annuity, that you receive equal amounts at equal interval of times. तो हमने एक एवरेज CF निकाल लिया. देन वी सेड कि हमने अगर 9 लाख रुपए खर्च करे तो प्रोबेबली हमें 5 साल में किस परसेंट पे, बिकॉज वी हैव टू टेक एंटायर कैश फ्लोज फॉर दिस मेथड, फॉर IRR वी नीड टू टेक एंटायर कैश फ्लोज. तो हमने कैलकुलेट करा कि 5 साल में किस रेट पर ये जो है वापस आ जाएगा 9 लाख. वापस आने वाला मेथड कौन सा था, कहाँ पे हम कैलकुलेट करते थे कि एट विच, दैट वाज पे बैक पीरियड. पे बैक पीरियड में हम क्या कैलकुलेट करते थे कि हमारी इनिशियल जो कैश आउटफ्लो है इन हाउ मेनी ईयर्स दैट विल कम बैक टू अस. नाउ हियर वी नो द नंबर ऑफ ईयर्स, वी नीड टू कैलकुलेट द परसेंटेज. सो वी आर सेइंग कि एनुअली हमें इतना कैश इनफ्लोज आ रहा है तो किस रेट पर दैट विल बी इक्वल टू 9 लाख रुपीज़. तो उसके लिए हमने एन्युटी फैक्टर यूज किया. व्हाई? बिकॉज वी आर टेकिंग द सेम अमाउंट. सो दैट विल गिव अस एन अप्रॉक्सीमेशन. दैट इज नॉट IRR table, that is present value annuity factor table. It may or it may not, there is no compulsion. मे बी क्वेश्चन में ही दे दें आपको, जैसे इन दिस क्वेश्चन इट इज गिवन डिफरेंट रेट दे रखे हैं. हो सकता है वहाँ पे प्रेजेंट वैल्यू एन्युटी फैक्टर इज गिवन इन द क्वेश्चन. इफ दे फाइंड इट दैट इट इज अ लेंदी क्वेश्चन लाइक द लास्ट वन, they will give you, and if it is a shorter question then they think that you can do it on yourself, then it will not be provided. It depends on a question. So for suppose it is a question of 12 marks and only machine X IRR is given to you to calculate, then obviously they will not give you the table, because then you have sufficient marks for that much. हाँ, the higher the rate, because that is the required rate of return, that is the rate that the project is reaping us. So the higher the better. So let us not calculate IRR in this, but if you will calculate, you will find out that there is a conflict between the ranking of IRR and NPV. But here also the two project doesn't have the same life. The life of this project is how many years? 3 years, and the project life of P is 6 years. So we cannot compare this based on NPV. So what we will do? First we will calculate the NPV of both the projects, then we will convert them into annualized NPV, and then we will tell which one should be selected. So this one is easy, you can solve, please solve. At 15%, why 15%? Here it is given that take the hurdle rate as 15%. Hurdle rate matlab cost of capital. Okay? So you have to, at 15% you have to discount these future cash inflows to bring them at the present cash inflows, calculate NPV, and then give the answer. So calculate. This one is very simple. It doesn't even involve lengthy calculations. No, just 15%. If it was IRR, then you would have to check what is the percentage. Here it is given estimate NPV of the project using 15% hurdle rate. So just 15%. And the rate are also given to you. How do we calculate NPV? How we calculate NPV? What is the formula of NPV? You people are not clear with the NPV. and we are doing IRR. Then you must have revised it, na? Net present value is the present value of cash outflow minus the present value of cash inflow. Since the outflow is at the beginning of the year, then I know the present value of the cash outflow. So this part is already solved. What I need to calculate is the present value of the cash inflow. To calculate the present value of cash inflow, what I need? The cash inflows and the rate at which I will discount it to bring it at the present value. If it has 1 year, 2 year, then I need to bring it to the present value. And to bring it to this present value, I need a rate which is known as discount rate. So here the discount rate is given to me as 15%. So at 15%, I will bring these future cash inflows to the present value. Once I have calculated the present value of all the cash inflows, I will sum them up. That will be the total present value of all the cash inflows, and then I will subtract it. What was the acceptance and rejection rule of NPV? What your common sense says, what it should be. I have calculated the present value of cash outflow. Outflow क्या हो गया मेरा? Cost हो गया. Present value of cash inflow. Cash inflow क्या हो गया? Benefit हो गया. When will I accept the project? Benefit is more than the cost. When will that happen? Present value of cash inflow is more than the present value of cash outflow. Then I will accept the project. If it is less than the present value of inflows is less than the present value of cash outflow, then I will reject the project. Are we clear till there? हाँ. So we will be calculating the present value of cash inflows for project P 1, 2, 3, 4, 5 and 6. What are the cash inflows? 13,000, 8,000, 14,000, 12,000, 11,000 and 15,000. What are the present value factors? 0.8696, 0.7561, 0.6575, 0.5718, 0.4972, 0.4323. So the present value will be, multiply the present value factor with the cash inflows. So we'll multiply 13,000 with 0.8696, which will be 11,305. I'll take approximately 6049, 9205, 12001, 5469, 6485. What is the total? How much? 50? 514. 50,514. Okay. So what was the outflow? So the NPV will be 50,514 minus 40,000. This will be 10,514 for project P. Now we have to calculate for Q. The rates will be same, but the number of years are only 3 in this case. The cash inflow in first year is 7,000, then we have 13,000, then we have 12,000. Multiply 7,000 with 3.8696. How much? 6087 9829 12001. What will be the total? 27917. So the NPV will be 27917 minus 20,000, because the outflow here was 20,000. So the NPV will be 7,917. Both project has a positive NPV. So as per our rule, we should accept both the project. But since these both are the mutually exclusive projects, we can select only one of them, and they don't have the same life. Then we need to do what? We need to calculate the annualized NPV. How will calculate the annualized NPV? For let us calculate for first J, project J or Q, whatever it was. So the annualized NPV will be NPV divided by the cumulative present value. So we have to add all these three. So 0.8696 plus 0.7061 plus 0.6575. So this will be 2.2332, which will give us 2.2332 3545.13. 3545.13. Similarly, we will calculate for this. Here we will take the cumulative for 6 years, since the project life was 6 years. So in 2.2332, we will add 4, 5 and 6. So we will add 0.5718 plus 0.4972 plus 0.4323. This will be 3.7345. This will be 2,800 2,815. Now, if we would have gone by the absolute NPV, then this has the higher NPV. We should have selected this project. But since the life of both are not equal, we cannot compare it in absolute terms. We have to take out one relative figure, which is annualized NPV. Now, the annualized NPV of project J is higher. So, we will select project J. आर बी क्लियर? यहाँ तक सबको सब समझ आया? अभी तक हमने कितने टेक्निक्स पढ़ लिए हैं? How many techniques have we studied till yet? Till we have studied that financial management has the objective of wealth maximization of shareholders. To maximize the wealth of a shareholder, it is a function of three types of decisions, which is investment decision, financing decisions and dividend decisions. We started with investment decisions. There are two kinds of investment decisions: long term, which are related to your fixed assets, and short term, which are related to your current assets. These kind of decisions are called capital budgeting decisions. These kind of decisions are known as working capital decisions. So, we started with capital budgeting decisions. Now, the capital budgeting decisions has three process. First, you need to analyze the cash analysis. You need to know the cost benefit analysis, for which you have to know three things. Cost and benefit कैसे measure करते हैं? First, in your cash analysis, you need to calculate the initial cash outflow. Then you need to calculate the subsequent cash inflows. Then you have to calculate the terminal cash inflows. ये दोनों क्या हो गए? बेनिफिट हो गए कैश के फॉर्म में, एंड दिस इज नोन एज द कॉस्ट. दिस विल बी आवर कॉस्ट. इफ वी हैव टू गो फ्रॉम नेट प्रॉफिट टू कैश फ्लो आफ्टर टैक्स, कैसे करते हैं? फ्रॉम नेट प्रॉफिट इफ वी हैव टू गो टू द कैश फ्लोज, we'll add back depreciation, and if there is any interest, we add back interest. Why we add back depreciation? Since it is a non-cash expense. Why we add interest? Because this comes under cost of capital. So, when we calculate the cost of capital, the rate at which we are discounting, we will consider the interest. It is the cost of debt. So, to avoid double counting, we add back interest. So, we receive, or if there is any other non-cash expense, what we get? Cash flow after tax. And throughout entire capital budgeting decisions, we consider the cash flows after tax. The second part is required rate of return. You need to know the required rate of return. Till now in questions the required rate of return was given. We will learn how to calculate the required rate of return, which is generally the cost of capital in your cost of capital lesson. Then the third is various evaluation techniques of capital budget, under which we either accept the project or we reject the project, right. So there were broadly two capital budgeting techniques. Broadly there are two capital budgeting techniques: non-discounting cash flow techniques and the discounting cash flow techniques. What is the difference between non-discounting cash flow techniques and discounting cash flow techniques? We under non-discounting cash flow techniques, we doesn't consider the time value of money. Under discounting cash flow techniques, we consider the time value of money. तो अगर यहाँ पे consider नहीं करते, so there is no discounting. कोई discounting rate नहीं होता, कोई discounting नहीं होता, कोई present value पे we don't bring back the cash inflows. Here there is a discount rate to calculate the present value of future cash inflows. Under non-discounting cash flow techniques, we studied two techniques. First was accounting rate of return or average rate of return. The second one was payback period. Accounting rate of return is the only capital budgeting technique under which we consider net profit and not the cash flows. Because as the name suggests, it takes the accounting profit of a project. So it is basically ROI, return on investment. So how much average net profit you are getting? What is the formula for ARR? Average net profit divided by the average investment. Fine. What was the formula of average investment under SLM? Half original cost minus salvage value plus salvage value plus working capital. ये ARR था. Now the disadvantages of ARR were: one, that it doesn't consider the time value of money. Second disadvantage of ARR was what was the second disadvantage? That it doesn't consider the cash flows and it considers the net profit. Fine. So we tackled this problem with payback period, because payback period consider the cash flows. So what was the formula of payback period? If there are similar annual cash inflows, then it is cash outflow divided by the annual cash inflow. But if the cash inflows are not equal, then we need to calculate it manually, that in how many years or months we will get back our initial investment. So our main focus was to get the initial investment back. Now what was the drawback of payback period? Again, it doesn't consider the time value of money and it doesn't take into account the entire life of the project. We only consider till the time we get back our initial investment. Those years are only taken into account while calculating the payback period. So it doesn't take into account the entire useful life. Now this was tackled by discounted payback period. which come under discounting cash flow techniques. So what was discounting? What was the formula for discounted payback period? Same as the payback period, only now we consider the present value of the cash inflows instead of the face value, right? Present value of cash outflow divided by present value of cash inflows. Fine. Now what was the problem with discounted payback period? Now it considers the time value of money, but the second problem still exists, that it doesn't consider the entire useful life of a project. How we tackle that problem? Through NPV, net present value. And net present value is the most compatible technique with the objective of the management. That is, every project that has a positive net present value will increase the wealth of the shareholders. If you have sufficient resources that you can fund all the projects that reap positive NPV, then you as a management will accept all the projects because it will ultimately lead to the wealth maximization. What was the formula for NPV? Present value of cash inflow minus present value of cash outflows. If there is a positive NPV will accept the project. If there is a negative NPV, will reject the project. Fine. Now the problem with NPV is, that it is in absolute terms. So two different projects which have different lifespans or which has different initial cash outflows cannot be compared under NPV because it has different, gives the answer in absolute terms. So if they are mutually exclusive and we have to select, then the NPV, we cannot take the absolute value of NPV. So then comes the IRR. IRR gives us the result in percentage terms. So under IRR we can rank different projects. The one with the higher internal rate of return is given the preference. What is IRR? IRR is a discount rate at which NPV is 0 or the present value of cash outflows is equals to the present value of cash inflows. And the formula for IRR is, so till now under discounting cash flow techniques we have done NPV, we have done discounted payback period, NPV and IRR. What is the formula of IRR? Lower rate plus positive NPV divided by positive NPV minus negative NPV into the difference between the higher rate and the lower rate. Fine. Now if there is a contradiction between IRR and NPV, NPV is given the preference. Fine. Now the problem with IRR. What is the problem with IRR? It's very tedious to calculate, right? नहीं, perfect कुछ नहीं होता है. It depends upon the situation. Software होता है. There are software in financial modeling. You can calculate it on Excel as well. Now, the biggest demerit of IRR is it assumes that whatever cash inflows are coming into the business are reinvested at the same rate, that is the IRR rate. So, suppose after 1 year you get the cash inflow of 1 lakh rupees. Now, what will IRR say? IRR will say that I am putting back this money in my project at this rate only, the one that we calculated. But after a year, it is a possibility that the economic environment will change and the capital available in the market is either at a higher rate or a lower rate. So, this is not a practical assumption under IRR that the amount is invested, reinvestment rate is same as the IRR, the internal rate of return. This is not a practical assumption. So, to tackle this, we have modified IRR and that is known as modified internal rate of return. What does the modified internal rate of return says? It says that we will reinvest the cash generated at the cost of capital. At the cost of capital. Fine. So, now we will be doing the modified internal rate of return. So, what we do under modified internal rate of return is in IRR we used to bring all the value to the present. We used to say that the present value of cash outflow should be equal to present value of cash inflow. In IRR, to make it simple, we can do it by present value as well. To make it simple, we'll take all the values at the future value. So, initial cash outflow will be equal to the future value of the cash inflows. Now, these cash inflows when we'll compound, अब हमें future के लिए compound करना पड़ेगा. The compound interest, rate of interest will be your cost of capital return, rate of interest. Fine. And this is your MIRR. So, we will be calculating this and we are saying that we are reinvesting the cash inflows at the cost of capital. Fine. Is it clear? Anyone, any doubt? Anyone has any doubt? MIR is the rate of compounding that makes the initial cash outflow in year 0 equal to the terminal of the cash inflows. So, this will be your MIRR or total terminal cash flows, where we will be taking out the future value at the cost of capital. So, we will do a small question and it will be clear. So we need to calculate, only one thing we have to calculate right now, the future value of all the cash inflows. तो फ्यूचर वैल्यू के लिए क्या लेंगे, कंपाउंड इंटरेस्ट, कंपाउंड फैक्टर, ठीक है. What is the initial cash outflow? Purchase cost, that is 1,90,000 plus installation charges of 10,000 and there is nothing else, right? So the cash outflow is 2 lakh. Subsequent cash inflow is given to us after we are given cash flows only, so we need not take out, we need not have to depreciate, deduct depreciation, add back depreciation, because it is given in cash flow itself. So we need after tax only. Cash flow after tax or subsequent to it is given as 1 lakh rupees. So every year it is 1 lakh rupees, right? So what we'll do, year 1, 2, 3 and 4. 1 lakh, 1 lakh, 1 lakh and 1 lakh. Now we will multiply it with the कंपाउंड वैल्यू फैक्टर. अब ये जो है इसे हम फ्यूचर पे लेके जा रहे हैं, तो ये कितने ईयर्स के लिए कंपाउंड हो रहा है. कैश इनफ्लोज आर ऑलवेज, इफ इट इज नॉट स्पेसिफिकली गिवन, वी अज्यूम इट टू बी एट द एंड ऑफ द ईयर. फर्स्ट ईयर के एंड पे हुआ तो कितने साल हुआ कंपाउंडिंग, 3 साल के लिए. सो व्हाट रेट विल टेक, द कंपाउंड वैल्यू फैक्टर ऑफ 3 years which will be 1.331. यहाँ पे कितने के लिए होगा, 2 के लिए 1.21. यहाँ पे कितने के लिए होगा, 1 के लिए, और यहाँ पे it will be 1 only because ये हमें एंड में ही मिल रहा है, राइट? बिल्कुल एंड में मिल रहा है तो कोई कंपाउंडिंग हो नहीं रहा है, it will be 1 only. So what will be the future value? One lakh 33,100, 1,21,000, 1,10,000 and this will be 1 lakh. Fine. We have done it at 10% rate, which is our cost of capital. Now what is the formula? What is the summation of this? 1 lakh, 2 lakh, 3, 4, 4 lakh, 4 lakh plus 33 plus 21 will be 54, 64. So 4 lakh 64,000. So this will be, the total of all the years will be 4 lakh 64,000. And there is one more thing left, that is the terminal cash flow, right? What will be the compounding value factor of the terminal cash flow? It will be 1 only, right? Because it is at the end only. तो terminal cash flow कितना हो जाएगा? The salvage value is 0. So it will be 0 only. There is no working capital as well. So there is no terminal value, right? So this is 4 lakh 64,000. The formula is initial cash outflow 1 plus r raised to the power n equals to the future value of the cash inflows. So the initial cash outflow was 2 lakh rupees. 1 plus r raised to the power number of years are 4 equals to 4,64,000. So you have to solve this. So 1,4 will be 2,64,000. So this will be divide over, sorry, 2.32. अब इसका अंडर रूट 4 हो जाएगा. साइंटिफिक कैलकुलेटर में इट्स गिवन अंडर रूट 4. यू हैव एनीवन हैज साइंटिफिक कैलकुलेटर? Anyone has scientific calculator? Otherwise I need to. $2.32. It will be, I guess, 6 point something. Okay. So you need to solve this. There is a button on the scientific calculator in which you can put the square root as whatever value is there. Okay. So on scientific calculator you will calculate this and then you will subtract 1. What will come is the R, which is your MIRR. Fine. Anyone has any doubt? Any doubt? अभी तक कुछ समझ ना आया हो? So we'll quickly cover profitability index as well. Profitability index is very simple. This is also known as your benefit cost ratio. What is the other term for PI? Now PI is a modified version of NPV. What happened? If the two mutually exclusive projects with the same life has the same NPV, then we calculate PI, or if there is capital rationing. What is capital rationing? What is the meaning of rationing? If we have limited funds, so the funds are limited and we have to rank the projects, then what we do? We calculate the profitability index, which is also known as your benefit cost ratio. It is quite similar as your NPV, only the difference is you divide the amounts. So the present value of cash inflow is divided by the present value of cash outflow. तो इससे क्या पता चलता है? On every rupee invested, how much return your project will get you. ठीक है? The formula is very simple. Total present value of cash inflows divided by the present value of the cash outflows. So one small quick question on this. In this, what is the formula for PI? Present value of cash inflows divided by the present value of cash outflow. So for project A, 1 lakh divided by 20,000, it will be 5. For project B, 2 lakh divided by 50,000, 4. For project C, 3 lakh divided by 1, 3. So which one of these 3 will you give the preference? The acceptance and rejection rule of PI is if pi is more than 1, accept the project. If pi is less than 1, then you reject the project, because that means the cash inflows are, if it is less than 1, that means the cash inflows are less than the outflows. So, your benefit is less than what you are putting in the project. Here the preference will be given to A, this will be second and this will be third. Fine. So, we have completed all the techniques. Only a small theoretical portion is left of risk analysis and capital budgeting, and in next class only 10 minutes will take for that, and then we will start with cost of capital. Fine. Any doubt, you can practice capital investment, capital budgeting decisions. If there is any doubt, you can ask in the next class. And it is a very important topic. There will be a question from this. It is never possible that there is not a question from capital investment decisions. Fine. So, thank you. Have a good day.